No, we continue to get the tech sell-off that we were told we were not going to get. I told you we have an AI bubble, and the AI bubble is going to burst. Now, the market was down with the S&P 500 and the Nasdaq, but we didn't close at the lows of the session. The Dow was up 260. The Dow up just over 0.5%. The S&P was down 0.5% to close down at 35. It was down much lower at the lows of the session, down over 1%. The Nasdaq was down 1.5%. The Russell was down nearly 1%, and the VIX was up 3.5% to close at 1864. We've got big earnings this week, and again, we have Alphabet. Tomorrow we have, after the closing bell, Amazon. Alphabet beat on earnings and revenue. Alphabet was down more than 2% at the during the session, and after hours they're down right around 2% or so, or just under it, for reporting earnings. During the session, we had AMD, after reporting earnings, dropping by 17%, posting the worst day since 2017, leading the tech sell-off. Again, we were told this wasn't going to happen. Oh, no possible way. Yet we continue to see rotation out of tech. Now, in addition to AMD dragging the tech sector down, Nasdaq 100 selling off, we got the ADP private payrolls, and again, another horrible report. We continue to see deterioration in the labor market. Last month, we got 37,000, a very, very weak report. This one was supposed to come in at 45,000. It came in less than half of that, only at 22,000. Like I say, with the jobs report, which again, supposed to get Friday, probably not going to get it because it might still be delayed. Brief government shutdown, but regardless, get it soon. I continue to talk about the deterioration in the labor market. The warning signs are here for anybody to see, but people bury their head in the sand. And again, you have the same warning signs right before the recession started in 2007, the same warning signs that you had right before the bursting of the tech bubble. Usually you start seeing this weakness in the labor market, but the private payrolls coming in just at 22,000. Remember, this jobs report, whether we get that on Friday, it doesn't look like we are, but if we do, or get it shortly thereafter, it's only supposed to be 60,000. Another terrible, weak, pathetic report. We've seen the negative numbers. I predicted that we were going to get negative numbers. We've seen 3 months of negative numbers in our recent history. Last month, we only have 50,000 jobs. And again, eventually this is going to go negative and stay negative in all likelihood, and you're going to start seeing thousands of jobs lost once we start moving into the recession. The warning signs are here. With the tech sell-off, being led by AMD tanking 17%, we saw Nvidia get another sharp decline. Again, this is now 3 days of selling after our doji candlestick. Nvidia was down nearly 3.5% today, 3.41% coming right to our trend line right here. Completed that negative divergence on the MACD, the RSI, and our stochastic had rolled over with that doji on the sell-off. We dropped below the 10 and 20 and the 50 period moving average. So again, we're just above that 200 period moving average. I'm going to be watching to see if this head and shoulders, that got changed to red. Let me change that back to black. The line here in the weekly time frame, I'm going to be watching to see if we start breaching this level. And again, you better be paying attention to what's going on. Nvidia is down nearly 9% for the week, 8.86%. But there's nothing to worry about. There's not going to be an AI sell-off. Tech's fine. Talked about this head and shoulders pattern. Back in October, I told you that I believe that Nvidia peaked the day of the Nasdaq on October 29th. So far, that high is held. I predicted that because we're at major resistance, called that peak, the long-term weekly chart. I thought we'd take out the 50-week here, the 200. If we take out this neckline, you're going to be taking out the 50-week eventually, and the 200 period right below that, eventually heading back to this 200-week moving average. You have a broadening formation. The smaller head and shoulders could evolve into a larger head and shoulders. The broadening formation could evolve into a head and shoulders as well there. With this left shoulder here marked in red, the head formation, we get the right side of the head formation here, and then you get a big bounce once the Fed panics and we get jumbo rate cuts. Market celebrates and says it's all over. Bitcoin keeps dropping to new lows. We just took out 80,000. Then we dropped down to 74,000. Now we're taking out 74,000. Keeps dropping to new lows. I didn't think it was possible that Bitcoin would go down. Lost 43% now. Nvidia is going to join it. So is Nasdaq. And as I've said, this could be a wave 1 and a wave 2. We could be starting wave 3 right now. Crash wave 3 on Nvidia. Once we confirm a close below the head and shoulders neckline. This massive negative divergence in the monthly time frame. Again, we're likely headed back to the 50-month moving average, and in the weekly time frame, that 200-week moving average. So again, you're going to see the sell-off and go back and test the April low. Bitcoin might bottom ahead of the stock market like it did in 2022. Stock market is going to now play catch-up, and so is Nvidia. AMD dragging the whole tech sector down, and the semiconductors down 4% here. The semiconductor ETF, SMH. Again, we had the doji at the peak, we had the rising wedge, we had the divergence. Oh, no, but this time it's different. Yeah, right. This possible head and shoulders, I think it's going to play out. I think you're going to collapse down to the 200 period moving average, and then you got this shot at this head and shoulders pattern setting up. But these divergences are playing out beautifully for the semiconductor ETF, SMH. Now, the VIX is predicting a update tomorrow. At least there's an 85% chance on it based on yesterday's price action for the S&P. 15% chance that fails. We're still holding above the 50 period. That's bad for the S&P. The S&P got some bearish signals today. That's bad for the S&P. So is this a topping tail that maybe gives the S&P a bounce, or is it an inverted hammer and we start going higher? Much like the inverted hammer right here, a little hard to see right there, but we got one. The MACD is still in positive territory. That's bad for the market. And you're going to see an explosive move on the VIX like what we've had over here. And we're going to go above the highs over here. Please support the channel. Please support the channel with the link directly below. That allows me to be able to provide you this information. If you like the charts, you like the indicators, please let me know that by supporting the channel. If you could take a moment to help out, I would really appreciate that. The link will take you to a secured site. You could donate any amount you want or make a recurring donation. If you could take a moment to partner with me, I would really appreciate it. Now, I've got some important things to say about the Nasdaq, but stay tuned because I'm going to be talking about the S&P, all kinds of sell signals on the S&P now. Nasdaq 100 took a hit today. It didn't close at the lows, but it took a hit. It was down over 2% at the lows, recovered off of the lows. We ended up down 447 points lower, down 1.77% lower, breaking this trend line from the November low connected to the January low. Took out the January low today. You closed below the January low and you broke that trend line. Got that black candlestick at the peak there above the upper Bollinger Band, just under overhead resistance. We turned off overhead resistance, could not move above the October low. Again, this Adam and Eve double top pattern. You've got this Adam and Eve double top pattern, this rounding second peak, just like MicroStrategy did. And again, the confirmation line is down here at the November low. We dropped nearly 9%, rebounded back up, got a lower high, and you can have wave 1 and 2 here. And if we come back and take out the November low, confirm an Adam and Eve double top here with a lower high, then the double top can begin to play out and we can play catch up to Bitcoin. But we're likely seeing that already start here and now doing technical damage. We close below the 100 period, the pink line. We close below the lower band here. We might try to get a bounce after we gapped lower, but you broke the trend line. We'll see if we back test it. The MACD rolled over yesterday. Now it's right here at the center line, turning slightly negative, just ever so slightly. And the MACD on the S&P did the same thing. It got a rollover yesterday. You've now taken out the 10 and 20 period moving average, the 50 period moving average, and the 100 period moving average. This wasn't supposed to happen. We are told there's no way it's going to happen. Yet it is. I warned you about the divergences on the Nasdaq back in October, and we got more divergences with this lower high that's set up with the more recent price action, as I've talked about. But again, you've got this massive broadening formation, and again, the divergence here marked the peak in October. Now we're getting a lower high, and you even have a divergence here in the more recent price action, but we're not moving to new highs. Something's going to happen to give us a dramatic drop. The tech sell-off, the AI bubble bursting, geopolitical issues with tensions in the Middle East. The U.S. is likely going to strike Iran. Does that do anything to the market? Who knows? Political issues sometimes do, sometimes they don't. Never know if it'll rattle the markets or not. Russia invaded Ukraine. Initially, the markets got a little rattled and then shrugged it off and ignored it. You just never know. Is that going to be part of the catalyst? Is the banking crisis going to start becoming evident to the public? And you can see what's going on with the Fed pumping money into the system. This isn't stimulus. This is they're trying to create liquidity. We have all that, and then we are in earnings season. I'm just telling you, something's going to happen to give us a big sell-off or a combination of things, or maybe it's just a tech sell-off. We'll see how it unfolds. It's starting. Now here with our linear scaling, you can see the double top pattern. I told you we broke this trend line. We back tested it. We slightly overthrew it. Here with the linear scaling, log scaling, we just went up and slammed right into it, and we turned back down. We got that black candlestick above the upper Bollinger Band, and now we're trying to take out the cloud. We're taking out the 100 period moving average, closing below those levels. Right here, a confirmation line. Right below it is that 200 period moving average. Continue to see the distribution. They're selling into the rallies. The October peak here, the December sell-off there, after the November bottom, more distribution as we went sideways, and now we're selling off. And again, eventually you're going to come down and take out this level, but we'll get a bigger drop when you close below this neckline here and the 200 period moving average. And again, you're going back towards that April low. Maybe to it, maybe just above it, or beyond it. Bitcoin's already taking out the April low. The Nasdaq and S&P are going to begin to get this first leg down as Bitcoin got the second leg down. They're going to play catch up, and Bitcoin could bottom out before the Nasdaq and S&P. Beginning to see the tech sell-off. Couldn't even make a new high, going sideways. S&P just went up just over 1%, just around 1.20%, rounding up. I told you last time it went just 1.5% higher than the previous peak from 2021. I told you last week we get that shooting star, that topping tail. I told you we were going to rally up, but not make new highs. And we didn't, and we ended up rallying up, and it failed. P went higher, but the Nasdaq did not. And again, just like the shooting star over here, we get another one. That's being confirmed this week. By Friday, do we have confirmation of that? And as we're doing that, we're taking out the 10 period, we're taking out the 20 period here in the weekly time frame, which is what I told you had to happen. We're getting a reversal of conditions in the weekly time frame right now, confirming this bar. We've gone nowhere for months, going sideways, forming this double top, this Adam and Eve double top. Continue to warn the Nasdaq in the monthly time frame. We've got this divergence in the more recent price action with our peak in 2025 and back over here in 2021, this larger divergence. Warning you, something's going to happen that's likely going to take us back to this long-term trend line on the Nasdaq and to the 50-month moving average towards that 200-week moving average. Now, you got some people saying on social media, oh, the RSI doesn't have a divergence. Well, yes, it does, going back to the 2021 peak. It doesn't have one in the more recent price action, but it doesn't matter. You got a bunch of indicators that do. The rate of change, the money flow, it's all over the place. The histogram, it's everywhere. And here on the price oscillator. Ignore all these other divergences in the monthly time frame because the RSI doesn't have one in the recent price action with the 2025 peak. It does with the 2021 peak, but we're going to ignore All the other divergences on all the other indicators, I mean, again, and you have this rising wedge likely going to come down here, hit this trend line, hit this 50-month moving average, maybe bounce there, rounding the Fed. You're going to break this level. When Nasdaq had the bursting of the tech bubble, it dropped over 40%. That was in 2.5 months, about 10 weeks. Lost nearly half of its value, just over 40%. Oh, but the AI bubble, this time it's different. Yeah, that's what they said about the dot-com bubble. It turned into the bursting of the tech bubble. We saw Amazon drop 90% and tech stocks collapse and dot-com stocks delisted and zombie companies removed from the Russell. It was a purging, a cleansing, all the stuff that shouldn't have been on there. See the same thing here. Nosebleed levels. There's going to be a reset. Same thing with the weekly chart with the Nasdaq. This is the log scaling again. We had this peak right here. You're now trying to take out this 20-week moving average. You do have, again, the larger diversions going back into 2024 in the weekly time frame. You have the larger diversions in the monthly time frame going back into 2021. And we were so weak with this rally, we couldn't even see the MACD turn back above the signal line or the price oscillator. The stochastic rollover and form a divergence in this, or a confirmation of a lower high, I should say, after forming the divergence at the October high. Formed a divergence, confirmed a lower high. All these divergences play out in the 60-minute time frame with the Nasdaq and the S&P 500 with breakdown, turning off of horizontal overhead resistance, dropping below the 200 period moving average, dropping below the trend line here now. So again, the moving averages, the cloud here in the 60-minute time frame, they are now resistance. The moving averages in the daily time frame, they're now resistance. Eventually, we're going to make our way here, down here, and take out the November low. Remember, I was talking about the January low needs to be taken out. Okay, we did that. Now we've come back here, and we're right here at the December low, slightly breaching that on the intraday lows there. This support zone right here is being tested, and we're trying to bounce off of it after slightly breaching the December 17th low. Eventually, you're going to head down over here. Now, the VIX is predicting an update tomorrow. Do we go back here and we try to rebound back up? We'll see. We have the Amazon earnings again for the closing bill tomorrow. We'll see what happens. We're seeing a sell-off here, a tech sell-off. Now, again, I told you we got that bearish reversal of conditions on the Nasdaq yesterday. Told you the S&P would likely get it today. It did. We got the red bar on both of them yesterday with the awesome oscillator. S&P tried to do it. It couldn't do it. Nasdaq was successful. And then continuing to drop today, Nasdaq down another 1.77%, down 2%, more than 2% at the lows. So again, momentum has shifted, and yesterday, remember, we saw trending signals. I went through them with you and showed you we had trending signals turn bearish, still not yet on the S&P. Well, we saw the S&P join the Nasdaq, getting a bearish reversal of conditions. The red arrow, the red cloud, the red bars. MACD rolled over yesterday. Now it's going negative. Another red bar on the awesome oscillator. Eventually, it will go into the negative region. We already had the stochastic turn. Remember back over here, we got that black candlestick at horizontal resistance, and I told you there's a very good chance that the market is topping today with the S&P moving higher, the Nasdaq coming up to resistance and slamming the brakes on. The very next day, I told you that again and told you that I believe that the top was in for the S&P 500 and Nasdaq got the lower high. And this is one of the reasons why I thought the S&P was done, is because it came up right up to that level just like it did last time around at the 2021-2022 top between the S&P and Nasdaq as they diverged. And then we began to sell off. Oh, that's not supposed to happen. Continue. You can see the red here, the selling into the rally as we go sideways, and eventually you're going to take out the November low. Not only do we have a bearish reversal of conditions here in the daily time frame, but you're getting it for the weekly time frame. If I bring up the 200-week moving average, this is eventually where we're headed on the Nasdaq, back to test this April low, the 200-week moving average. And eventually, again, headed down to take out the November low towards our next stop, the 50-week moving average. You're getting this week And we got to have that by the final close of the week on Friday. You're getting a bearish reversal of conditions in the weekly time frame and confirming the topping tail that I talked about for last week. I told you this sell-off was going to happen this week because we got that topping tail. I told you I thought we would confirm that this week because we've halted right at resistance, which I talked about in great length of detail last week and earlier this week. Again, confirming a lower high. Again, getting the divergence in October, and then now confirmation of a lower high with these stochastics. Nasdaq weekly chart here. S&P doesn't have it yet, but we could. Again, Nasdaq's lost 10 and 20 week moving average. Here we are, we're below the 10 week moving average right now, down, but you got to take out that lower boundary and close below it. We were there at the lows of the session today, but you've got to see that happen by the end of the week if we're to get a bearish reversal of conditions. The divergence is in play. MACD couldn't even get back above the signal line, still has a divergence, and you got the larger divergence. We had one in October, and now you've got this larger divergence and diverging with the Nasdaq. Now, the MACD is going negative on the Nasdaq. S&P is not there, but it did roll over the same day. We get another bar here. Bar 3, by the way. I said bar 2 a moment ago, but you did get the bearish reversal of conditions today. I told you to watch for that yesterday. So momentum is now shifting. Can it remain that way? We had it shift over here. It didn't remain that way. It went and got one final high as the Nasdaq went up and filled that gap that we watched that formed just after the October peak. Finally filled that gap. I took the S&P slightly higher, but now we're turning. We're giving back that rally, and here we're right at our 50-period moving average. So again, you've got the divergences, you've got the multiple point divergences here going on, and you've got multiple point divergences if we take the MACD way back, as I've talked about. As I told you, we tried to get bearish signals yesterday on S&P. Nasdaq did it. We got the trend signals turning bearish. We got the momentum turning bearish. S&P tried to do it yesterday, couldn't do it. Now I told you I'd be joining the Nasdaq. It is now doing that. Again, going to get back most of this rally or all of this rally, but you're about to get a pretty dramatic drop. As I've said, over the next 6 to 12 weeks, you're going to have the bear market, the crash to kick off the bear market. You're going to drop more than 20%. Now we get the sell signal here on the S&P 500. We had it yesterday on the Nasdaq. I told you there's going to be a tech sell-off. We're going to see the bursting of the AI bubble. Oh, no, this time's different. Nowhere for months, forming this double top. It's going to play out. Because the market takes its time doing what it's going to do, Bitcoin did at the top. It went sideways initially, July, August, September, until we finally peaked in October. It did the same thing. It went sideways. Then it collapsed. You're going to see the same thing here, but because it doesn't play out immediately, then people go, oh, it's not going to happen. They dismiss the risk because the Nasdaq and S&P have been going sideways in a topping process. So S&P joining the Nasdaq today. Here is the Nasdaq's daily chart. Some of my other signals, Nasdaq turning bearish here today after turning back to bullish, going up, getting a lower high, turning back to bearish today. Here, S&P has remained bearish, moving to a new high, getting that divergence. Again, I've marked the Fibonacci's here. S&P, the 5,300 area right here is likely where we're going to at least see this 78.6 Fibonacci likely tested. 5,300 back over here. The low at 48.35. Could move beyond this level, but I've talked about the trend line in the weekly time frame moving back towards that. I've talked about the 200-week moving average. We'll see, but again, Bitcoin is already taking out the April low. The stock market is about to join it, going back to the April low. But a boatload of signals on the S&P turning bearish today. Here's one. Nasdaq turning bearish yesterday. Here, the S&P turned bearish yesterday. Nasdaq turned bearish here yesterday, again going sideways. You can see the chop. Now we're going to get the drop. Already started. People just don't realize it yet. Here, Nasdaq turned bearish yesterday. S&P 500 tried to do it today at the lows of the session, and it didn't quite make it. It was close but no cigar. We closed just above the lower end of the cloud there. So again, we'll see if we do that here. But other signals turning bearish on the S&P, joining the Nasdaq, and momentum shifting with a bearish reversal of conditions today on the S&P. I've marked some support and resistance levels here directly overhead. We have the horizontal resistance on January 28th. We moved just slightly above the January 12th peak, turned down off of there. Bar still red. Here we're right now resting at the 50-period moving average. You have the support area here. If we make our way down, again, the confirmation line is right here at the November low right here, our 200-period below that. Horizontal support down over here from the February 2025 peak there, under that. A couple of support levels above that. But again, you're probably going to come down towards a confirmation line, towards the 200, probably try to get some kind of bounce around there and eventually break these levels. Start coming back and filling some of these gaps and eventually make our way towards the destination of the April low. After some chop and going sideways here, turning bearish yesterday, continuing to be bearish today for the S&P. Now, I told you about these momentum signals last Friday. That flipped the bars to bearish here on the Nasdaq. But again, these other signals have called these turns. And again, selling off nearly 9% here. And then these sell-offs with these lower highs below that October peak. You're seeing distribution, and it will become really apparent once we start taking out the November low there and get the confirmation of the double top. Same thing with the S&P 500. We got the signal there on Friday. We gapped lower, went back and filled the gap. Nasdaq did not. And then we turned down. We tried to rally, and then we turned. This was actually a down day yesterday, but we didn't close at the lows. So the bars were bearish at the lows. Then they didn't close that way. Now we get the bearish bars, but the momentum gave us a heads up. We are likely going to turn, and I talked about this previously. Something similar to what we had in 2022. And again, you made a higher high, just over 1.5% above that level. Here we were even lower than that, just right around, rounding up 1.20%. Back testing the broken trend line, not reaching the upper boundary. It did reach it over here in October. But again, you're likely turning off of this resistance level I talked about. You're probably going to come back to the trend line, the 200 period, or maybe the April low and horizontal support. So again, I'll be watching. Well, I didn't draw that very straight. I'll be watching these levels. Something's going to happen that's going to give you a dramatic drop. The lower boundary is where the bounces have happened. This upper boundary, this is where the tops are. And again, the S&P has likely topped, now forming this massive head and shoulders pattern, just like Bitcoin. Maybe down to here, and it's a slanted neckline, or down to the 200-week or something, or even back to the April low. Nasdaq got the double top with the lower high, turning off horizontal resistance. The S&P, the double top with the higher high, doing exactly what we did in 2022, and the S&P peaked exactly. We formed a divergence in this most recent price action with the RSI, and we've turned back down. You did the same thing with the MACD, the stochastic rolled over, and again, we're resting right at that 50-period moving average. Signals are now starting to turn back to bearish. You've taken out the 10 and 20-period moving average. Eventually, again, we're going to take out the January low, December low, which is the support zone. Nasdaq's already done it. And again, just barely took out the December low today. Eventually, we'll make our way down to these November lows, which is the confirmation line to the double top patterns. Now seeing the divergences begin to play out as we turn. We back tested these trend lines, the trend line from the April low, the trend line from the October high connected to the January 12th peak, and we've turned off of these levels. Now we need to see the cloud taken out, the 50 period taken out. We tried to do it today, but we closed just above it. Nasdaq has taken it out, and again, eventually make our way down. Again, over the next 6 to 12 weeks, you're going to see this drop happen going into March, maybe on into April, and I've marked both of those scenarios here. Then you're going to get the rally back up for the right shoulder. If we move beyond the 78.6 Fibonacci around 5,300, again, could overthrow it or even move back to the April low. But I think you're likely moving to 5,300 on the S&P 500, which is the 78.6 Fibonacci of the entire advance. This divergence gave us a left shoulder. This divergence is going to give us the head formation. And then we're going to be watching for that right shoulder. Once the Fed panics down here, probably before Powell leaves, the Fed is going to panic. Whether that is in here in February or on into March or April, we'll see, depending on how quickly we drop. A massive drop is coming. I keep warning. You can see the divergences as clear as I can. And again, let me bring up that MACD, massive divergence there as well, and even in the most recent price action. Hey, one thing to be watching for in February, again, we're likely going to get the ruling on Trump's tariffs. Could also be a market mover, so don't lose sight of that. The Supreme Court will eventually release that decision, and it could be here over the next couple of weeks, some point in the next few weeks. A massive divergence on the RSI in the weekly time frame, and again, divergence is all over the place. Here's another trend line I'm watching from the 2022 low. Again, this trend line, you have the trend line from the 2020 low, you have the 200-week moving average. So again, we're going to be looking at the Fibonacci retracements. And again, you're probably moving to at least 5,300, but this trend line here is a possibility if we don't reach it, if we get more of a slanted neckline. But again, I think you're probably going to come closer to that 78.6 Fibonacci at 5,300. But this is a possibility here, and I've talked about that. I think you'll probably move closer to that channel line from the 2020 low, which is lower than this trend line from the 2022 low. Intraday charts at the peak, we had that rising wedge. It broke down. We got the lower high now, filling the gap, and now we're turning down. Moving averages going back and forth intraday, showing likely a stage 3 top. Same thing on the 30-minute chart. The divergences did play out nicely on the 60-minute charts. And again, Nasdaq breaking the trend line. S&P tried to breach it and bounced. So again, we'll be watching that. The moving averages were below them. The 200 here on the 60-minute chart, the 50. We'll see if we get a big drop. And if we do, you could get the bearish cross. Nasdaq could be in crash wave 3 right now. The lower high that it got, that could have been a wave 2. So keep that in mind. I don't think the market could go down. We've had warning signs with gold and silver. We've had warning signs with Bitcoin. Stock market is not immune to a crash move to kick off the bear market. Posted this chart. I thought we peaked on January 28th into these trend lines. Now it's starting to play out. We're reversing off of those trend lines.